on the other side. In fact, we already have Saurabh Gupta. He is Director and CFO at Dixon Tech, joining us this morning. Saurabh, great having you. Saurabh, let me start off with regard to margins, right? And we've seen a bit of a margin trim. And part of that, I believe, is because of mobile phones. And just talk to us about what's played out in this quarter with regard to phones and with regard to margins.
Sure. I think so. The margins got impacted mainly on account of three factors. One, of course, our mobile PLI 1.0 got expired in March. And now another mobile PLI 2.0, which has come in. It will take a couple of months for us to get those numbers into the system. Secondly, there were inflationary pressures across the commodities and supply chain. So one, the memory prices impacting the mobile phones. Of course, it's a pass-through. But since it's a pass-through, the margins, because of the increase in selling prices, largely on account of the memory prices going up, the margins optically look lower. And third, I think so, our input cost increase and the polymer cost increase across our washing machine portfolio and refrigerator portfolio, which is part of our ODM business, there we saw some margin compression. So these are largely three drivers why the margins got contracted. But we feel it's kind of a temporary impact. And ultimately, the margins in washing machine and refrigerator, there is a pass-through mechanism. And we are working a lot on also driving a lot of efficiencies in that business.
So does that pass-through happen immediately, in the sense Q2 itself? Will we start seeing the numbers looking materially different in terms of the margin picture?
I think this large part of it hopefully should get passed on. It gets passed on with a lag. But for us to effectively pass on completely, the commodity cost needs to come down. But seeing the situation on the crude side, because polymer being a byproduct of crude, we see that it may take some time. But yeah, gradually and slowly, those will keep getting passed on here.
Saurabh, how do you look at the memory, memory prices? Because that's also something which is remaining elevated, and with the kind of AI demand and the semiconductor demand which is coming in, it's unlikely that that memory prices are going to come down anytime soon. And how are you trying to hedge that? And is memory prices also gets passed through to the customers?
Yeah, so one, it's a complete pass-through. What we get is a per piece conversion charge. So the commodity cost or the memory cost increase, it's completely passed through. What it optically looks like, our margins optically look lower, because if you are making a per piece conversion charge, and if the commodity cost mainly on account of memory goes up, then your margins optically look lower, which is exactly what happened in Q1. So you're absolutely right. I think so. This memory prices are not coming down, at least in the near future, because of a lot of investments happening on the AI side. And clearly the memories are allocated more there, and the margins there are much more superior. And the capacities in the short term don't come by. They take time. There's a long gestation projects. So we feel that the prices for mobile phones will continue to be on the higher side, at least for some period of time, which will, of course, have some impact on the margins as well. Yeah.
And do you see a reason to do a hedge here, because you have currency pressure also coming in here as well? Is that something that you follow at Dixon?
See, we don't do a hedging of commodity. Basically, the memory prices is complete pass-through, so there is no point hedging it because it's a low margin business for us. Secondly, as far as the currency is concerned, so almost 90% of the overall revenues that we have, there is either a natural hedging or the cost of hedging is passed on to the consumers. Only 9 to 10% of our FX exposure is open, which we try to hedge sometimes, depending, we take a call. But yeah, large part of our business is automatically hedged and passed on to the customers.
What's exciting in the market is the backward integration that you're doing. Do you think margins will restore to the normal levels in FY27, given the kind of work that you're doing on backward integration?
So we feel that even, of course, our capacities for display should be up and operational by Q4, and then the ramp up stabilization should happen by Q1 of next financial year. And every quarter, the number should keep going up. Our camera business, where we are expanding the capacity and also putting capex for deepening of manufacturing, that is in the progress right now. And there, so we feel that 28, 29, we should, on account of both this backward integration projects, we should expand our margins by 100 basis point plus on the mobile side, And 27, 28, I feel that almost 40 to 50% of that should start reflecting in terms of the margin expansion. So definitely not this year, but definitely from next year, the margins will start to expand.
You're also pricing in Vivo coming on stream as part of this margin increase, I believe.
Yeah, Vivo should start reflecting in Q3, H2 of this financial year. And the annualized potential for Vivo is quite immense. They are the number one player in the smartphone market in India. So we feel that next financial year, it can add almost 35, 40,000 crore revenues to our numbers. And this year, let's see how much we can maximize in the H2 of this financial year. So we are working closely with them to close the transaction, and hopefully it should start reflecting in Q3.
What is the kind of volume that you're penciling in for FY27 and 28 for Vivo?
So 28, we should be closer to somewhere around 20 million plus. And this fiscal year, we will target, if we are able to do a 35-40% of that. We're targeting that kind of a percent.
Okay.
Okay, and just a couple of follow-ups with regard to Vivo itself. So it'll add around 35 to 40,000 crore in terms of top line. Does it increase your average selling price with regard to mobiles? I know you gave numbers, but just give us a perspective on that on this as well.
Yeah, it should definitely increase. Vivo is slightly more on the premium side, so the average selling price of the combined mobile portfolio should go up.
And memory prices have inched up, and in fact, not just inched up, they've literally flown. Do you expect any cool off anytime soon, or this is going to be something which is slightly long drawn?
I feel it will take some time, as a lot of capex happening on the AI side. So I think so the demand for memory will continue to be on the higher side. But it's very difficult to predict. But yeah, I think so in the short and medium term, I don't think so memory prices are coming down.
And how much of these memory price increases are being absorbed? Maybe not at your level. I mean, you clearly stated that there's a pass-through at your level, but by your customers, and how much has been passed on to the ultimate consumer? Just if you have a perspective on that.
Yeah, so I think so a lot of that has been passed on to the ultimate consumer. So if you look at all around, the prices of the mobile phones have gone up by 35-40% on an average. And clearly we are seeing that as per the various reports, the overall smartphone market will contract from 150 million to almost 10 to 15%. And Dixon, despite the market getting contracted, we are hopeful that excluding Vivo, we will maintain our volume numbers for this fiscal.
Saurabh, you also have a significant stake in Aditya Infotech, and the fair value calculation also helped push the PAT as well. Is there a plan to monetize that stake?
So we've already monetized some part of that stake. We are left with around 2.5% kind of a stake in that company. So as of now, we have not taken a call, but yeah, at some point of time, we may look at monetization.
So will it happen in this financial year, or you'll push it to the next financial year? It's around 2.4% stake, right?
It really depends on whether we require that kind. The company is doing really well, and they have a strong growth potential. So we'll take a call. We have not taken a call on that.
Okay, Saurabh, thank you so much for joining us and giving us that perspective. We'll let you go.
Thank you so much. Thank you.